This presentation examines whether profits generated by Canada's grocery chains are staying in the country or flowing abroad. It explores the structure of Canada's grocery sector, how ownership patterns determine profit flows, the size of these outflows, and what they mean for competition and food security. The findings show that while not most, a significant portion of grocery profits in Canada ultimately ends up in the United States through US-owned retail giants. Yes. A meaningful share of profits from Canada's grocery retail sector flows south of the border through US-controlled chains like Walmart and Costco. These companies report their Canadian profits within their US consolidated statements, meaning that after paying Canadian taxes and reinvesting in local operations, their residual earnings accrue to US shareholders. With 2 of the top 5 grocery retailers foreign-owned, this cross-border profit transfer is economically significant and structurally embedded in the market. Canada's grocery industry is highly concentrated. Roughly 76 to 80% of all grocery sales occur through 5 companies: Loblaw, Empire/Sobeys, Metro, Walmart, and Costco. 2 of these are US-based. This concentration means that when Canadians shop for groceries, a noticeable share of what they spend is captured by foreign-owned firms. The Competition Bureau of Canada has warned that this concentration, combined with high barriers to entry, reduces competition and allows profits to flow outward rather than being reinvested domestically. Walmart Canada and Costco Canada operate as subsidiaries whose earnings are consolidated into US parent financial statements. Analysts cited by the Wall Street Journal estimate that these 2 chains together control up to 30% of the Canadian grocery market, depending on how groceries are defined. That represents a large, recurring flow of value to US shareholders. Statistics Canada's data on foreign-controlled enterprises confirms that about 15% of Canadian corporate profits across all sectors are directed to foreign parents, showing that grocery outflows reflect a wider economic pattern. It's important to note that most grocery profits still stay in Canada. 3 of the 5 major grocery companies, Loblaw, Empire/Sobeys, and Metro, are Canadian-controlled and reinvest their profits domestically. Moreover, the US-owned chains do invest heavily in Canadian stores, logistics, and online operations. However, after those reinvestments, the residual net income is still consolidated by US parents. Significant in this analysis means that the share flowing south is large enough to matter in economic and policy terms, not that it represents a majority of the sector's profits. Profits move across borders through standard multinational mechanisms. These include dividends paid to the parent corporation, retained earnings added to the parent company's consolidated results, intercompany charges for brand royalties or data systems, and debt payments to global treasury centers. These are normal international business practices, but collectively they represent the channels through which grocery revenues from Canadian consumers become part of US corporate profits. With roughly 80% of grocery sales concentrated in the top 5 firms and 2 of them foreign-owned, the US-controlled portion of the sector is clearly material. On the conservative end, each US-owned firm might hold a single-digit share. On the upper end, according to analyst data reported in the Wall Street Journal, Walmart and Costco together control close to 30% of the market. Even at the lower range, the profits repatriated from that slice are substantial enough to influence national income distribution. Canada's food and grocery retail sector generated approximately $6 billion in net income in 2022, up from $2.4 billion in 2019. If US-controlled chains account for 20 to 30% of this total, their combined share of profits would range from about $1.2 to $1.8 billion. After taxes and reinvestment, much of that value is consolidated with their US parents. That means a low billions flow of Canadian grocery profits crosses the border every year, enough to matter for economic planning and competition policy. The implications are threefold. First, income leakage. Billions of dollars earned in Canada help build US shareholder wealth instead of strengthening Canadian investment pools. Second, competition policy. More entrants and lower barriers would increase domestic reinvestment and keep more profit in Canada. Third, supply chain resilience. Incentives for all major grocers, foreign and domestic, to expand warehousing, cold chain, and regional processing would boost both food security and national value retention. Canada's concentrated grocery structure ensures that ownership determines where profits ultimately go. With Walmart and Costco firmly embedded among the top 5, cross-border profit flows are both substantial and predictable. The path forward is to improve competition, promote domestic reinvestment, and require more transparent reporting by large foreign-owned retailers, measures that could capture more economic value for Canadians without targeting individual companies unfairly. The Competition Bureau of Canada provided evidence on market concentration and barriers to entry. The U.S. Department of Agriculture's Ottawa office supplied comparative data on retail ownership structures and U.S. participation. Statistics Canada contributed quantitative measures of foreign control and corporate profit repatriation. The Wall Street Journal offered analyst-based market share estimates for Walmart and Costco. The Packer provided trade-level confirmation of the Big Five dominance in Canadian grocery sales. The McCarthy-Tetrault summary clarified how the Bureau's findings relate to policy and regulatory implications. Together, these sources establish that a significant portion of grocery chain profits generated in Canada flows to U.S. parent companies through ordinary but economically important corporate mechanisms. Viewers can pause here to view the full citations and follow links to the source material. There is more fact-checking information to discover.